Hello again, this is Alex with MasterChartsTrading.com, and this is market recap for Friday, July 13, 2018. First of all, please hit the like button and subscribe to this channel if you're watching this on YouTube. Overall, the stock market seems to be bullish. We see NASDAQ is breaking to fresh high, S&P is within striking distance, IWM kind of trends lower. We'll explore if that means anything. I would continue still avoiding emerging markets and European equities, and Japanese equities look kind of shaky. So we'll also look in detail at some of the bond proxies. We'll look at the junk bonds, some strange development in bonds. Then we'll eventually get to Forex, gold, oil, natural gas, and cryptos as usual. Alright, so let's start with S&P 500. This is a S&P 500 mini futures. So let me zoom in for you on the indicator lines. About these indicators, you can find out more at MasterChartsTrading.com. These are my indicators. I use them myself to pretty good results. Find good buying and selling points. Also, I can determine if the instrument we're trading is in a bull market or a bear market, to a high degree of probability. So this instrument currently, S&P 500, is in a bull market. And how do I know? Because sometime in the past we have closed above this blue indicator line, and we have not yet closed below this yellow indicator line. So until or if that happens, you can see bear market levels. I will continue to think of this instrument as being in a bull market and to act accordingly. And how do you act accordingly in a bull market? You act accordingly by buying, by taking the side of the buyers, not the sellers. So here we have basically, we're approaching fresh highs on this instrument. Here's an alert I sent to my subscribers for SPY on the 28th of June of this year. You can see a nice gain here, and basically we're about 2% away from highs. So that's pretty straightforward, a bullish looking chart, and again we should act accordingly in a bullish looking for the bullish looking charts. In other words, we should be buying them. Here's QQQ. Notice that whereas S&P came down all the way to this blue indicator line, QQQ didn't even get there. You can see it was much stronger. It kind of bottomed around this green line and then continued higher and made a fresh high. So this is generally speaking a good sign, because technology is more risky and it's breaking out to fresh highs. So overall, this is a good sign for the general stock market, is when the technology is leading the market higher, because it's a more risky stocks in there. IWM correcting slightly and actually didn't make a new high according to this. Let me make sure. So the high is 169.87 and here high was 170. So according to this data, there was no new high yet made this week. How much to interpret this, I wouldn't really worry too much about it. Overall, the stocks have high degree of correlation to one another. So when I'm seeing various indices such as QQQ, basically S&P also kind of breaking out towards fresh highs, then I don't see a reason why IWM should not also break to fresh highs. So for now, I'm just going to look at it and not worry about it too much. Some of the more conservative sectors, here is XLU, utilities, very interesting price action. Big amplitude candlesticks. Look at the size of this candlestick. You can see average true range went up from, let me see, from 0.63 to 76. So in just one day of this volatility, you can see a lot of just a big action there. But I think the more indicative chart is this chart here, which is Dow Jones utility average. You can see quite interestingly, somebody must be using my indicators possibly, or I don't know. But you can see very, just basically right at the indicator line, price action. You can see close exactly in the indicator line. So, and then next day open exactly there and a drop. So interesting, we'll see if this actually means anything. To me this means we're attempting to break out. On this chart we're still seeing on XLU still a little bit behind, so ideally I would like to see a close above 53 here. So far I don't see it happening, but anything is possible, and especially with this action in the index itself. I mean, this just smells of a breakout. And notice how nicely it just nails it. So utility is looking interesting. Here is RYU, which is a equal shares utility, equal weight utilities rather, and there's the breakout on the 3rd of July of this year. So theoretically we could be just buying it already. It's not a very high volume fund, so I kind of personally prefer XLU. So let's see if this breakout occurs in XLU as well, because it looks like we're getting there to the breakout levels. Here's, for example, real estate IYR, and one of the recent alerts right there on the 5th of June also. Pretty nice move there. My position KBWY, this is a small cap a real estate portfolio. There's my entry at 35.37. At 36.70 or so I sold half, moved my stop to entry. So that's my profitable transaction right there, and I don't need to basically worry about it. Some other bond proxies. So we already looked at utilities. XLU was interesting and possible breakout. Price action, we looked at real estate. Let's look at PGX, which is a financials preferred stocks of various companies, but mostly financials. So here is an interesting again chart. You can see the breakout so far has failed out of 1479 area. Prices have been rejected, and you can see a nice pullback lower. We'll see where this goes. I mean, with the situation in bonds and the interest yields actually dropping, I wouldn't be surprised if preferred stocks could continue higher from here. Here's PFF, another preferred portfolio fund, but you can see that it hasn't actually even gotten to the breakout levels yet. But PGX looks very interesting also, and this is an attempted breakout. Maybe we'll see a bottoming pattern and then a rally higher, in which case this could be a genuine breakout. Alright, so let's continue. So let's look at some of the foreign markets. Let's look at Japan first, EWJ. And last week I already cautioned against it. I sent my subscribers an alert about Japan. So if I had some positions in Japan, then I would potentially start unwinding them. I don't have any positions in Japanese markets or in the European or in emerging markets currently. I closed all of my positions, in those markets because I don't like the price action. Most likely this price action is due to fluctuations in the currencies, but the fact of the matter is I don't like this price action, and I'm not gonna stick around and find out what's gonna happen. So for my subscribers, I'm cautioning them against owning Japanese shares right now. It's not an outright sell signal. An outright sell signal for me would be if we get down to about $55 area. That would be just a total avoid of the Japanese equities, which has not yet happened, but it's definitely moving in that direction. Especially look at the indicator line, see how they're curving up. And what that means is the price will have a harder time now catching up to those indicators which are curving up. But it will be a much easier time for the price to travel towards the up curving lower boundary of these price channels. Alright, let's continue to Europe. Here's VGK. Now, I kind of mentioned in passing last week that we're going to get a bounce here. We're getting a bounce. Basically around 58 would be where I would be expecting the resistance to come in, and looks like it's already coming in, but I wouldn't be surprised to see another attempt to bounce to like 58 here, especially if the dollar weakens. Here's emerging markets, EEM. Same story. You know, here we have a breakdown, basically an avoid signal, and then now a bounce. So to me, this is a counter trend bounce. The trend is down, and we're bouncing higher. So to me, this would be a potential opportunity to look for a short entry. In other words, if we get a bounce to, let's say, well, at least 45, but ideally to like 45, maybe even $46, I think would be possibly a nice opportunity to short this particular ETF, which is emerging markets. So overall, I think we're seeing you know, effects of stronger dollar, and I'll get to a dollar in a second, but basically most of the stock markets worldwide are under pressure, while United States stock market is actually breaking to fresh highs. Finally, I wanted to look at XLP, which is a staples. So notice that price was able to close above this red line. Now I caution traders against shorting equity. Equity has a bullish bias, so I'm trying to make sure that my students do not or try not to short equity in a bull market. So right now we have a bull market. Why do I say that? S&P 500 is in a bull market because we're approaching next fresh highs. It's an unequivocal bull market. XLP, here's XLP, is a stock fund. It's a part of a stock market, and as such it has a bullish bias, just like the rest of the market. So we're seeing a potential breakout here. I would still not buy it yet. For me to become, you know, actively interested, I want to see a close above the blue line. But if you're a short, you know, kind of more aggressive trader, then potentially you can look for a buying opportunity here. Now be very careful, because notice what happened here. Just a few months ago in March of this year, there was an attempt at the breakout above this red line, and notice what happened afterwards. It collapsed lower. So for me, this would be interesting if we see a breakout above this resistance at 55 or so. Okay, let's continue to bonds, and first let's look at junk bonds. So junk bonds made a new 52-week low actually last week. The fact that it's making new lows and going contrary to S&P 500 is somewhat troubling. Right now, I mean, if I was an aggressive trader, I would probably go ahead and short it here and maybe see another low. Probably a better place to short would be around 36.09 right there. But I don't see it. Obviously, I don't see any turnarounds yet. So this is not a very good sign. I like to see junk bonds and stocks correlate to one another. Alright, let's look at the investment grade universe. Here is TLT. And it's not looking, it's not looking like a bad chart. Yeah, looks like we're trying to go higher here. And the breakout levels are not that far off. I mean, look at this. We're just like less than 1% away from 1.5% away from breakout. Yeah, I mean, and here's TYX. This is the opposite of TLT basically. But same thing. We can see move lower, and then the bull market in bonds, may just continue here. So it's an unclear situation currently in bonds. I mean, if I was to short it, I would short it on a breakdown, and I don't see this breakdown. Already since the 27th of June of this year, I noticed that we're kind of trying to go higher here almost. I want to say that, yeah, we're trying to go higher here. And this goes contrary to what's happening in the bond and the yield universe, because they're raising the short-term interest rates, and if we see a further decline of the long-term interest rates, that would flatten the yield curve basically. Let me see if I can find if I can show you what I mean. Here is, you can look on MasterCharts.com. If you look at their website, there is a tool called yield curve, dynamic yield curve, right there. So currently the yield curve is as such. Now the long-term interest rates could be headed down, and what I'm looking here is a bearish levels are 2.875 for the 30 years, so not that far off. We can just drop a little bit, and if they're gonna continue raising the short-term interest rate, then you can see that the curve will flatten. So let me show you what I mean by flat curve, yield curve. You can see that this is just before the 2007-2008 crash. Well, at least drop. You can see the yield curve almost actually inverted. You can see that this one, the short-term yield curve, short-term yield was higher than the longer-term yield. So you can see that normal right there, and then again before 2001 to year 2000, you can see inverted yield curve. So right now it's still, they're saying it's normal, which is probably true. But again, if they're going to continue with the rate hikes, and they're promising 2 more rate hikes, and additionally if the longer term yield drops, so longer term yield is currently at 2.933, so that's, I'm guessing that's 2.933 right there. it could come down to 2.875, which is like probably right there. So it will get very close to a flat and potentially eventually a inverted yield curve. And in the past, there's the flat curve and inverted curve right there. You know, in the past, at least 2 iterations of this examples, you could see that we had a bear market in stocks. Hasn't happened yet, but there's something to be on the lookout for. All right, let's continue to the dollar and various commodities. So here's Dxy Dollar Index on the daily time frame. I think it's a bullish security. We see a breakout here on the 28th of May of this year, and then from then on I basically would looking to buy it on any pullback really. This latest candlestick could be interpreted as a shooting star candlestick, which means that we may see a pullback of probably about 1% or so. But again, this should be viewed as a buying opportunity. Euro versus US dollar projected, I think, to move lower. It's a bearish instrument. British pound versus US dollar also looks like a bearish breaks here, so I would be trending it on the downside. I would not be buying it. US dollar versus Japanese yen, I actually have a position. I bought it up here on the 22nd of May, and just sold half of the position here. Still have half riding. US dollar versus Canadian dollar. There's the breakout on 28th of May, and then basically we should be just looking to buy it on any breakout, on any pullback rather. US dollar versus Mexican peso, interesting action. Kind of, you know, Mexican peso really gained. We'll see where this goes. I think overall trend for the dollar is higher, so the fact that you know Mexican peso is pushing higher currently, or in other words, Mexican peso is winning the battle against the dollar. It's kind of, well, counterintuitive, but you know this also may not mean anything because compared to euro, Mexican peso has a much lower volume of transactions, and I'm not sure if we should be looking at Mexican peso as the primary mover of the market, of foreign market. So I would, you know, just watch it. Me personally, if I was trading this chart, I would be looking to buy it on a breakout above this blue line on the 19. What is it here? 19.